Ambrose, what is your overview of trading activities at the NGS this week?
For me, it's a weapon development to start with. When the market pulled back for the first time the previous week, after 7 straight weeks of rally, people were panicking. I said, no, anywhere in the world, don't see market continue an uptrend. It become abnormal. That pullback creates opportunity for one to buy, and that's why I call it there's what called valid pullback in technical analysis. When you see that's the value one, you need to panic. That is there's opportunity for you to buy. The trend is stay on. But for me, I'm happy that the market closed positively this week, and it tells you that what market is looking at. It started coming as the earnings. We know that if you look at what is happening in the economy today, there are a lot of economic concern about here and there. But in equity market, there's something that drives market is just liquidity. Where is funds flowing to? And because also MPCs are ahead of next week and already in the earnings season, and also inflation because that came last week and put a lot of investment window in red. Despite we are in either fixed income, we are in Treasury B, the only place you can all run to hedge against inflation now is the equity space. And for that, we are seeing activities coming to equity space. Even those that are fixed income players are trying to position their portfolio to put in some some stock or some equity into their portfolio so that they can balance. Because I tell you, yes, even though you want to your risk advert, you want to make profit in the market. Yeah. But for me, that's why we are seeing that funds are flowing to the equity. And when you see money flowing to the equity, it tells that there's buying, interest, and that buying interest will push prices up because the simple, demand and supply. We're taught in secondary school that when demand is more than supply, price will go up. If there is too much demand for a particular stock, price will go. And that was saw today and the week. For me, what really changed the dynamic of the market today is that all eyes on this big name or big profiles to release their earnings. We have seen the earnings that came from UCAP, some one that came from Infinity Trust, some one that came from Multiverse. But the big one that changed the whole market is the first holding, FBN holding. Yeah, when it came, it beat market expectation. Both analysts and investors won. The result that such result have not emanated from this company or this group for a long time. See that number, it gave investor an insight to what is expected in the market. But I also draw caution at this point here before you call another person to come on. One, when you see this kind of number coming, let's know that this number is just one-off thing. Even yesterday, you saw the governor sharing number of 1.9 trillion. It's just one-off thing too, because it's just because of rebasing or repricing of our exchange that has kind of provided to liquidity. Also, renewable subsidy. You can see liquidity around. That means I said that coming MPC meeting, if you're looking at inflation and looking at exchange rate to come at high rate, you are just mistaken. But that's why you must give time to see all these things play out before you can hike. That's why I said. We that also rejoice that we have seen this kind of number from First Bank, which that's going to run on across all the banks because they all have the same system of operation. But remember that this is just for the second quarter, half year. But from third quarter, we're going to see another dynamic. But there are some banks that has good inflow that will sustain their earnings even in third quarter. But for investors, I have to remind that if you're not seeing such number again in Q3, Q4, don't be surprised. But just because of the valuation of assets, because of the exchange rate, that what we are seeing that their balance sheets are looking very good, their earnings are looking very strong. But also, companies have sustained that in first quarter. But let's have in mind that this number will not continue that. But it's a good one that banks are consistent in terms of earnings performance. For me, there's no cause for alarm. The market is still on the move. But I believe that market before the end of this month we're likely to hit either 68 or 67 because already the market tested 66. It pulled back. We end up seeing if more high profile earnings started in the market, we still saw impressive performance. Market to catch fire.
Now let me come to Oladipo Ajayi now. You've heard all that Ambrose has said. Do you share in that same sentiment looking at how the market has played and turned out this week?
Yeah, thank you once again for having me on. I think I share Ambrose's view. Just like what Ambrose reiterated, what we saw last week was a pullback that is actually so much expected in a market. You don't expect market to continue to rally forever without having people taking profits. And what we saw last week was about people coming to the market to take profits. But there's one key thing is the fact that the fundamentals are still there for most of the stock on the exchange. And when you compare them with their peers, most of them are trading below value. Yes. And as a result of that, it means is that most of them still have a lot of upside momentum or upside. And as a result of that, you tend to see most locals now having confidence to actually position in some of these instruments. And just like what you also mentioned, if you look at the result that was released by FBN, and that also moved market aggressively today, and it's not unexpected. If you look at the books of FBN at a Q1, they reported about net open position for FX that was about $753 million naira dollars. So when you look at it, the very is that they're having about $1.7 billion net open position on FX. So it simply means that the FX translation or devaluation of naira is positive to FBN, and not only FBN. We also found that the GT Bank, Zenith Bank also are sitting on net FX open position of about 1.5 billion. So you can see what the translation of some of these value will be on their bottom line, and that's one of the reasons why immediately results of FBN came out into the market. Immediately market have that view that okay, that means they're actually right, that there's every tendency that this will be replicated across board, and majorly on most tier 1 bank. And that's one of the reasons why we saw this renewed interest in the market, aggressive renewed interest in the market.
When we saw the inflation report, I was actually expecting that the inflation report will have a reflection, or better still, the market will react to inflation figures. But then we didn't really see much of that. What would you say actually led to that?
Thank you very much. I share in Abdul's and my good friend Dick's optimism. Market is responding to a lot of things. New government in place, new horizon, new optimism. The straw that broke the camel's back was the FBN, the result that shook the market. Market will continue to respond to these indices. If you look at what other banks are doing, it's a positive thing. I do not want to believe there is one-off thing, because the new optimism, the new policies of this new government, they are going to, market will continue to react positively to this development in the immediate future. Especially now that we are expecting the cabinet to be constituted, money is going to fly around. We look at the sharing of 1.9 billion naira yesterday by state from the, well, we know the MPC LPR is coming next week. Market will continue. It's not going to be a flash in the pan, as some analysts are saying. I share the opinion that the market has come to stay. The market will continue to respond positively to development in and around the market.